In this video, I'm going to talk a little bit about Rule 133, combine the strengths of an investor and a trader. When you do trading, you can buy on red and sell on green continuously, no matter what the market does. The market can go green, it can go flat, or it can go down, and you can make money going long at spot. Traders are exceptionally good at timing the market. They look across many charts. They understand the economic health. Investors are incredibly good at doing fundamental analysis. They can spot opportunities inside all markets. They are brilliant at hodling, holding on for dear life. It's good to know that all investors become traders anytime they buy or sell. The key is to be an investor that buys like a trader and sells like a trader. That is the ultimate. In this video, I'm going to show you examples of trades that I've done across the past couple of days. You'll find that turning over money is far, far more profitable than investing could ever be. This is not the mainstream narrative. Mainstream doesn't want you to trade. They want you to invest. Because if you understand how markets really work, you can make a fortune. The most important thing that you can do as an investor is to invest in your knowledge and also to invest in your emotional control. When things go red, when the market melts down, that's the ultimate time to get in, but that's the time when everybody's running for the exit. Traders do the exact opposite of literally everybody else. A real trader, a professional trader, sees the prices melting down and says, "Ooh, I'm going to get me some of that." One specifically important thing to invest in your knowledge is all about structural support and structural resistance levels. Many people want to be consistently profitable, but they don't act in such a way that will permit them to be. When you buy on red and sell on green, you will discover the secrets of consistent profitability. And that's very important. And it doesn't matter if you're an investor or a trader. The ultimate is to combine both mindsets and just apply Rule 621. Borsog, buy on red, sell on green. And there's our good friend, Borsog the Eagle. The most powerful thing that you can ever do is to know the structural support and resistance levels and how the Tier 1, Tier 2, and Tier 3 charts intercorrelate and interconnect. What I found from many decades' experience in financial markets, if you don't know where the structure is, you're just guessing. If you're guessing, the house will always win. The house in this case is the market, and the market doesn't know you. But it will reward you if you know how the tiered charts intercorrelate and interrelate with each other, and specifically if you know the structure of those charts. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets. This will assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please subscribe and smash that like button. All the indicators that I use on the daily video come from the service at ctksmethod.org. Let's run the numbers. Recently, I showed you a couple of trades on Bitcoin, just buying over here and selling up here. A lot of things have happened with Bitcoin since, and I just want to take you through what I did. I was accumulating as it was coming down, and you can see that I was adding to my position, and I did a couple of sales there. I also added to the position as it went down. I'm always buying on red. Now, the concept of buying on red doesn't mean that you wait for price to fall under the previous low. Red simply is it's retracing. And the more it retraces, of course, the better. One thing with the crypto market, it is incredibly forgiving. And you can see another buy there. And what happened? We had a very good session inside the market where a lot of positions sold, and you can see I'm now leaning back in and accumulating. What this means is that when people invest, they often tend to go opposite to this kind of concept. They tend to be scaling out as the price is coming down and then scaling in as the price is going up. This is completely natural and very, very normal, but you probably want to think the other way. When price is coming down, you get on the right side of the percentage, and you can see that you can turn over positions inside the market. What we're focused on is getting a really good annualized return on investment, but we know the market controls the return. It's really good to keep a hand in on the key projects like the ones marked up in Tier 1, Tier 2, and Tier 3 inside the service. In this way, you'll understand where the support and resistance levels are, and buying on red and selling on green is a fantastic way to create profitability and short circuit fear-based reactions in the market. You want to be buying when it's going down and selling when it's going up. This is a completely different way of thinking. So long as you're turning over literally annual bank interest every couple of days or every week, it doesn't really matter. But the concept is, so long as you're going forward, you're literally going forwards. And you can see here with Bitcoin Cash, what I did as it just plummeted down, I was buying, and then I could turn over my variety of different trades. No alt can escape Bitcoin's gravity. When we look at Litecoin, as Bitcoin was coming down, I was accumulating. A lot of people just don't understand how the institutions work. You want to become an institution of one. Institutions are always layering in as the price comes down, and then they layer out as the price goes up. You'll find the crypto market incredibly resilient. It does come down, but it can spike up very, very quickly. When we look at XRP, we can see that as the prices were absolutely tanking, I was layering in, and also layering in as the price was coming down. All those positions have since been sold. Sometimes you'll have positions left in the market. For example, as Ethereum came down, I was borsogging, buying on red. I managed to turn over a couple of positions here, about 6 positions, but some are still in the market, and that's completely fine. A couple of days ago, I mentioned if we saw a bit of a breakout in total crypto market cap, it could come up rather quickly. And how did I know this? Because of the statistically significant lines in the CTKS method. We knew that if we filled this fresh air gap, it would move up pretty quickly. And these are 2-hour candles. So you can see it basically filled around 75% of it just inside 2 hours. And now it's come up into resistance. This is why knowing where your support levels are and your resistance levels are is incredibly important. If you don't know where the resistance and support levels are, the statistically significant ones, you're in a lot of trouble because you'll just be guessing. When we look at Bitcoin, let's just pop on the indicator, and we can see that through this 40,063 level, there was a lot of structural resistance. But if we got over that, we knew that we had a fresh air gap. And boy, oh boy, was that powerful. Look how many levels it took out. Why did this occur? Because total crypto market cap had a positive fresh air gap, and that in turn created more momentum to the upside for Bitcoin. What does it mean for Bitcoin from here? It means that as we push up, we would expect a retest. These kind of curling over events are really good, especially if we get a long wick down that starts to get our boar levels, our buy on red levels. If we get that, we know that there's another little fresh air gap up to 42,873. One of the biggest problems that investors and traders face, they simply don't know where the structural resistance and structural support levels are. We know that this 41,524 mark is incredibly strong inside Bitcoin's price structure. Getting a hovering around these areas just to consolidate and then push up to confirm this area of support, that's what I would personally be looking for. That's why I'm layering into Bitcoin at the current time. As Bitcoin comes up, we know no alt can escape Bitcoin's gravity. We've seen some really good movers, some pretty good momentum here. The key is to know where your structural support and structural resistance levels are. There was a lot of negative news inside the crypto market, and I tend to invert those particular narratives. For example, there were so many long liquidations. Now we've seen everything turn around to the opposite side. All of these short liquidations cause the shorts to cover by buying, and that pushes the price up. It's a really good idea to invert basically market-wide narratives. If everybody expects it to go up, it's probably going down. And if everybody expects it to go down, it's probably going up. It's very difficult to do, but you need to get really excited as price is coming down, because that's the opportune time to get into the market. Price is always moving in a wave, and so long as you don't get too ambitious or too greedy or too unrealistic on your percentages, you'll turn over a massive amount of money. Just think about it like this. If price is going down and down and down, like this, a lot of people will say, wow, it's all over. This thing is going to zero. And as soon as the street says something like that, the institutions say, about time. I'm going to make it go in the opposite direction. Trading and investing is all about controlling your emotions, and that's very difficult to do when your hard-earned money is on the line. But it's the most profitable thing that you can do as well. Another way to think about it, when things get really, really negative, a lot of people need a lot of time to be convinced it's going to continue. Therefore, when the price is going down, people tend to leverage up and go short, and then they get crushed, they get liquidated. That's why avoiding leverage is a really good idea until you're an expert. We can see in the last 24 hours, nearly $90 million worth of shorts were liquidated, and across nearly 40,000 positions. When too many longs have been liquidated over too long a period of time, the shorts will get their turn to get liquidated, and vice versa. Please be aware of these things. Through nearly 4 decades in financial markets, the one thing that I can share with you from my experience, if you don't know the structural levels, if you do not know where structural support is and structural resistance levels are, you'll be guessing. If you're guessing, you will be losing. It's just an unfortunate factor of financial markets. And always be aware of these positive fresh air gaps, because price can move very, very quickly up. When you get a negative fresh air gap, price can move very, very quickly down. It's a double-edged sword. That's why we always have 3 concurrent strategies: an up strategy, a neutral strategy, and a down strategy. The up strategy says, I've got levels that I'm placing higher than this. The consolidation strategy is that I'm looking at the structural levels, trying to understand where I can profitably enter and exit. And the down strategy is an accumulation strategy. As an active trader in the market 7 days a week, one thing that you know, I'm not academic. I'm telling you what I experience on a day-to-day basis. For example, when we look at Trouble Teller, I saw that Trouble had an enormous amount of potential in it. And if total crypto market cap just blew up, I would expect Teller or Trouble, TRB, to blow up as well. You can see so many sells, but do you see me buying yet? No, not yet. Therefore, buy on red, sell on green, or Borsog needs a lot of skill to adequately apply. Will I scale back into TRB? You betcha. It's really, really interesting, and it's very responsive to Bitcoin's price behavior. That's why I was looking at total crypto market cap and Bitcoin. Seeing that total crypto market cap had that fresh air gap, the potential for Trouble, TRB, to just skyrocket up was absolutely on the cards. So I took advantage of it. And this is exactly how you apply the structural levels to charts that are not specifically marked up. Even better is that you actually mark up your chart. And well done to the community who bought on red and sold on green. That takes a lot of strength and courage to do, but a lot of people find it's the only way to go when they master it. Please let me know in the comments, how did you go over the past couple of days, and are there any specific topics that you would like me to cover off? I'm happy to do so.